Stock market today analysis for Monday, February 13th, 2023. Hey, in the description of this video, you're going to have a link to ifsuccess.com. Go ahead and check out this website. Download all four of these, and definitely download these two. If you download all four, you'll have to get those by default. Also, watch this playlist right here. And at the 1 minute mark, a link to a video is going to pop up right here. Don't watch it right now. Wait until this video is done and go back to the 1 minute mark. It's pretty easy to remember, right? How many minutes? 1 minute. And that playlist will give you 5 reasons why you should be selling cash secured put options. This playlist will give you kind of the how-tos, and in conjunction with these two downloads, here's that video popping up right there. Boom. It's just one video, not a playlist. Sorry about that. But so now when you watch this playlist, it's got 5 videos in it. It'll tell you basically how to set up some stock charts, how to get a basic idea of using them. The 5th video will help you use Yahoo Finance Screener tool for free to find some stocks that have some decent fundamentals to them and that fit in your budget. And these two will give you an idea of ways to look at different industries, look at different companies. It'll introduce you, if you haven't heard of it before, to obsolescence risk and things like that, and help you to be in a position to theoretically start paper trading, start practicing selling cash secured put options on stocks that you wouldn't mind owning or doing the wheel strategy on. What's the wheel strategy? Hey, you got to watch this playlist so you can find out. So feel free to take a look at all that stuff, read through this. Please take a look at the mission of I Have Success, and hey, if you like it, go for it. If it's not for you, no hard feelings. Tomorrow, Valentine's Day, we have the powers that be giving us the Consumer Price Index. I watched this fantastic video with Luke Groman today, and I love how he worded some stuff. So what I'm going to do for you is at the 3 minute mark, I'm going to link to that video with Luke Groman if you want to watch that. It's about maybe 40 minutes long, an hour, maybe a little bit over an hour, not sure. But at the 3 minute mark, you're going to talk about the CPI and basically something I think is funny about it. And then we got some other things happening here on Wednesday, retail sales, manufacturing index. And then we got the producer price index on Thursday. Here's the link to that Luke Groman interview. 3 minutes, right? So you got something at 1 minute, you got something at 3 minutes, and just to stick with the even numbers, I'm going to give you something else at 5 minutes. All right, so right now we're looking at futures market. Now the futures market is it's not something that if you are a beginner, you do not want to be trading in the futures market. You want to consider out of crawling, walking, and running. The futures market is on the running side, right? So if you're relatively new, what you can use these futures for is when the stock market's closed, you can watch, like ES is for the S&P 500, YM is for the Dow Jones, NQ is for the NASDAQ, and RTY is for the Russell 2000. You can watch these futures markets to have an idea of what might happen in the stock market when it opens. So right now, just taking a quick look at all 4 of these, we have the current candle in the top about 10, 15, 25% of each candle. So right now, even though they're down a little bit, they're not down much, and we're in the top part of that range, which is I would say a potentially bullish thing. All right, we'll pass looking at all the other futures for now. We'll get into looking at what I tend to look at is the general markets. Now, I had mentioned at the 5 minute mark, right? Got a link to a video at 1 minute, got a link to another video at the 3 minute, and then the 5 minute mark, we're going to have a link to another video. And that is, watching that video, it's from I think Jay Martin's Vancouver Resource Summit or something like that. But Grant Williams is being interviewed. Brent Johnson, one of the guys from the real estate guys, and this young lady Boom, right there, 5 minute, right? 135. That's easy to remember. You don't got to watch them right now. But between the Luke Gromen interview and these interviews with these four people, you should get a lot better perception around the not just the dollar, but currencies in general, their relationships to each other, and their in the relationship to whatever currency you're using to buying an asset. Right? Sometimes I talk about when the dollar goes down, an asset might go up in units of currency that's needed to transact in them. That doesn't necessarily mean the fundamentals of the asset became better. It could just mean that the unit of currency you're buying it in has went down in value, right? So if that's too much in the weeds for you, and you just want to sell cash secured put options on stocks you don't mind owning, collect some dividends, maybe sell some covered calls. Hey, you don't need to learn all that, but if you feel like it, it's there for you. I think it's pretty helpful, but I'm someone that's just absolutely in love with all this stuff. So anyways, the dollar, all these charts we're looking at are 1 month, and each candle is 1 day. So we're just getting a quick snapshot, right? We're not really able to see a trend, but this red line is a 200-day moving average, and we got some volume under there. And so with the dollar, all right, the dollar a few months back, it really took a dive. It was going up, but it took a dive. It's below this 200-day moving average. You see, it kind of went sideways, gapped up, and now it seems to be hitting some resistance around the 28 mark here. TLT, 20-year treasuries, they're still tested this 200-day moving average, and it's kind of been taking a little plummet down. Gold right now is a very illustrative of something that I talk about a lot, of how long does it take for the price action to get back to wherever it was before a big move. So for example, right, we're looking at these two big candles down, and gold had been in an uptrend, right? It still could be an uptrend, but remember, we're just looking at a snapshot. We're looking at 1 month, right? We're just basically getting an idea of what happened today and what happened in relationship to the last 30 days. If 30 days seems like a long time, you got to remember a lot of these markets have been trading for at least 100 years, maybe futures, maybe 150 years. I don't know. So 1 month in relationship to 100 years is not very much, or 1 month in relationship to 3 years is not very long, right? So we're just getting a snapshot. So anyways, we see it, even though this is up a little bit, it's kind of a sideways. It's a debate whether it's sideways or up. It's not a strong up like this, right? In this movement right here, that's a strong movement up. So we got this little sideways movement, drops down, and then the next thing, when I have a drop down, or I have in this case, like right here with SPX, I have a move up, I want to see how long does it take for prices to go wherever they're going to go. So in this example, right, gold had been in this uptrend for about a month, 2 months, something like that, and then we get these two big candles that drop down, and now it's just been trading in the bottom 50% of this candle, even to the point where it's below that, right? Tried to test that 50%, tried to test, actually test it, and then sold off. So now this has given us an indication that the bull trend in gold at the moment, at least gold futures, is it's not super strong at the moment. It could resume, right? It could, and we would need to look at a bigger picture if we wanted to see if the bull trend, over like a 10-year period, a 3-year period, right? But in this month period, 30-day period, it has ceased. The uptrend per 30 days has ceased. And oil is still between 82 and 72, basically. Staying in that range. If you see a pattern kind of like this and something's range bound, you could potentially look at some iron condors. You could look at maybe selling a strangle. You could potentially look at maybe just selling a naked option on one side or the other. Or maybe you sell a cash secured put option, or maybe you sell a covered call, or maybe you sell a spread on one side or the other. What range bound things, there's ways that you can cash flow range bound. You just have to learn those different strategies and learn what the risks are, because the whole thing of trading and investing is risk management. That's really number one. Bitcoin, not too surprising to me that it rallied up, kind of went sideways, and now it's dropping down. And you see it's really kind of dropping down on this 200-day moving average. You know, from my understanding, the way that the 200-day moving average came about is back in the days when people were charting by hand, they rounded down. Instead of 365, I guess it was just a lot easier to figure out the average for 200. So it's not as much, what it seems to be is not as much as the 200-day moving average intuitively or intrinsically has some value to it. It has a lot to do with a lot of people watch it, and a lot of people take action according to it, because it's kind of ingrained in the psyche. Now, that's a bit of splitting hairs. How does that really make a difference for you? I don't know. I like to know the little nuances like that. And another thing that I like to, that I'm aware of, is that a moving average is not support or resistance. It can act as support or resistance, but it's not support or resistance. It's a moving average. And a moving average at some times can act as, just like if I adopt a child, right? I'm the adopted father. I'm acting as the father, but technically I'm not the biological father, right? So it's kind of something like that. And you don't have to adopt somebody. Obviously, you could just play that fatherly role, or motherly role, or whatever your proper pronouns are. So Bitcoin doesn't surprise me that it's doing this, and let's watch to see how things play out. I don't live in a state that gives me enough freedom to actually easily be involved in Bitcoin. I think the hoops I would have to jump through are not worth it to me. If I lived in a state that gave me enough freedom to do it, then I'd probably be able to trade through TD Ameritrade. I definitely would be able to trade it through Tastyworks. Tastyworks allows people that live in more free places other than myself to trade. But when I saw it, I was like, yeah, great. I'm gonna start trading Bitcoin. Nope. The rulers of the place I live, they just don't give me enough freedom. So if you say, well, Brent, why don't you move to another place? That is a fantastic idea. And I tell you what, it is, if I were you, I wouldn't be shocked if I did. Anyways, so leave me a little message in the comments about what state or what country you live in, and do the rulers of that place give you enough freedom to easily speculate in Bitcoin. The VIX, we see the VIX dropping down, which is not really a surprise because we see the the SPX moving up. The VIX is derived from option action on SPX. And hey, just something to take note of. You see volume up here, but you don't see volume down here, right? Indexes normally don't have volume. So me personally, I'm looking at the index because I kind of want to be more in tune with the market. But when the lights are off, when the camera's not rolling, I take a peek at the ETFs to look at some volume too. Sometimes I'll do that for you. But so this is the volatility index, also kind of been known as the fear meter, and apparently, based on this, fear seems to be coming down. Right? Now, there's some new things that I've been learning about. I can't explain it very well because I don't know it very well. But apparently, these 0 days till zero DTE options, 0 days till expiration. Apparently, that can sort of goose the VIX up or down. And I'm not saying it is. That's what's happening. What I am saying is this is not the 1970s stock market anymore. This is not the 1960s stock market anymore. If you think that the companies are going up or down based on, it's a good company, there's a bit more to it. right? And the great thing is that selling cash secured put options on stocks that you don't mind owning, right? This strategy, you don't have to know all the other stuff. You don't have to get in all the weeds. That's why it's so great. It's really, really great for busy people, right? You can just go with this old school kind of thinking. Look at revenues, look at debt, look at things like PE ratios or enterprise value to EBITDA, PEG ratios, sales, operating cost, things like that, and find a good company, pays dividend. Make sure, like for whatever sector that company is in, that the payout ratio is similar to its peers. If it's too high, dividend could be cut, and you don't have to know all this extra stuff. 0 days till expiration, moving the market around, quantitative easing, quantitative tightening, which is just fancy, confusing terms for how much money is in the system sloshing around. But we see overall the market's moving up. All right, out of our four major indices, the Dow Jones has recovered the fastest. Recovered right. We looked at gold, right? We had this drop off here. It took 2 candles, and it's already up here, past where it opened, and up to this point. We're not out of the woods yet, though, right? We're not out of the woods. And let's look at these other indices. Now we see the next one showing strength is the SPX, right? 2 days later, we're almost to the point. We're almost recovered those. Third strongest one had overall, I think, had the biggest drop here as far as from this point to this point. 2 days, and we're a little over halfway. And the NASDAQ, which last year this overall was probably the weakest sector, we see that is, I would say it's not quite 50%. It's still in the bottom 50%. So if we got these different things coming out this week. So whatever this is, whether these numbers, whether the books have been cooked or not, and if you don't think the books can be cooked, research Enron. Right? You can't. When it comes to there's a reason why, like Gordon Gekko said, greed is good. And I'm not saying that greed is good, but I'm saying that Wall Street is corrupt. There's a reason why the Wolf of Wall Street was the Wolf of Wall Street, right? You should all this type of stuff, you should assume you're being lied to and protect yourself. That's probably the safest way to keep your money. And hey, if you say, Brent, that's not fair, blah, 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 you don't have to do it, right? If you want to be a patsy, go for it. If you don't think you're going to be a patsy, go for it, right? You do you. I'm just trying to give you a different perspective. Like, my cherry was popped back in the John Corzine MF Global days. Look it up. See what unprecedented thing happened and how basically the U.S. government let John Corzine, or in cahoots with Jamie Dimon, steal a bunch of money from your uncles, your aunties, your grandmas, your grandpas, right? Look it up. Like, don't be a victim to this stuff. It's corrupt. That doesn't mean don't trade in the market. It means risk management. Rule number 1, don't lose money. Rule number 2, remember rule number 1. So how do you do that? You got to know what your risks are. You got to know how to hedge your risks. And if you just assume that all these numbers are 100% accurate and you say numbers don't lie, well, then ask yourself, wait a minute, who inputs these numbers? Oh, humans. Do humans lie? Right? So they could put some fake numbers in there. Now, what's my point of all that? I guess just to let you know, like this, whatever numbers are put out, you want to you always want to have everything like this. This is one of the best things I ever learned from Robert Kiyosaki. This is a coin. You got the heads on this side, and you got the tails on this side. How many sides does this coin have? Right? Well, before I was taught this, I thought 2. 1, 2. But there's actually 3. There's this edge. And what Robert says is that the best investors stand on the edge and they look at both sides of the coin and then make the decision from there. So that's really what I'm trying to point out to you. I'm trying to point out to you that there's one side of the coin, what numbers are reported. The other side of the coin is that there could be some cooking of these numbers. So, but regardless, right, a lot of people are going to act in the markets as if these numbers are real. So you need to plan accordingly if you really want to get into the weeds. If you don't really want to get into the weeds, then what you could do is if you just want to sell cash secured put options on some stocks you wouldn't mind owning, let's use this healthcare sector as an example. Because why? Because healthcare, that's health has been around since humans have been around, right? It's part of being a human, right? Blockbuster is not part of being a human, right? CDs, cassette tapes, 4-tracks, MP3s, those are not part of being a human. Maybe listening to stuff is part of being a human, but the medium that you're listening to changes, right? But healthcare is going to be around. So let's say you find a stock in the healthcare sector that you want to own. It fits your price range. You can buy 100 shares of it. You have the cash to buy 100 shares of it. But you just don't want to go out and buy 100 shares of it. You're going to sell a put option, and you're going to get the exact price that you want. You're looking in the healthcare sector. You see the healthcare sector the last 30 days has basically been moving down. And regardless of if these numbers are true or accurate, they're going to be reported as if they're true. And the market is going to move on that. So let's say it has a movement to the downside. Well, then you could potentially, right? Let's say it drops down here and big sell-off down here. Well, maybe you want to buy a stock in this sector, and you are happy to buy it at this price point in here, right? So it drops down here, down to here, and it's a dollar away, which would make the premium really good when you sell this put option right there, right? And even if it goes back up, bam, you're just cash flowing a stock that you don't own, right? And you got a good price because you timed it when it went down. Now, what if it keeps dropping down? Boom. If it closes on expiration date, if it closes below your strike price, not only do you keep the premium you received, you're buying that stock that you wanted at the price you wanted to buy it at. Isn't that beautiful? And you don't even have to like know anything about John Corzine. You don't have to know anything about, you don't even have to know what PPI stands for, right? You can go on with your life. You can bring your kids to soccer. You can play video games. You can do whatever you want. Once you kind of have the selling cash secured put options on a stock you wouldn't mind owning down, it's pretty easy to do. Let's take a quick look through here. These different sectors. I see a little bit of a top here in technology, right? And before I go through this, there's a saying that the bull goes up the stairs and the bear goes out the window, right? So when things drop, they drop fast. When they go up, they go up slower. So at any time, things could keep going up, but they might. There's definitely there's like the strength of the movement. But even though it's not moving up or down really strong, it can continue to go that direction. So let's just kind of keep that in mind. So now what I'm seeing here in technology is at the moment, it seems kind of like there's an argument to be made that from this low point, right, if we make a trend line kind of like this, okay, it still could be in this uptrend, right? And I get it, trend lines are subjective, so it's like do not bet the farm on this trend line. Look, I can't even draw a straight line. So there's that, but also look at right here. I'm seeing something. I can't draw a straight line. I'm seeing like some resistance right through there. Sometimes what happens, but look at this volume, right? In the last 1, 2, 3, 4, 5, 6, 7, last 7 trading days, way more selling than buying. So, and then we got this up candle today on some low volume. All right, if tomorrow If we see some higher volume come in, maybe that'll help push through here. But what I wanted to point out is sometimes what happens is when you got this straight path on one side and you got this part pushing up, sometimes it boom pushes it up through there. Sometimes, not all the time, but that's something that we could watch for. The technology sector, a lot of the S&P 500 is made up of the technology sector. So if that keeps moving up, it could potentially move the S&P 500 up. Healthcare, we see that it might be breaking out of this downward trend. You know, it really depends on, as I mentioned, being subjective. Are you going to draw your trend line from here to here? It might just be at the top. I don't know, right? But just kind of eyeballing it, it potentially could be breaking out of this little downward trend for the last month. We want to see. That's a pretty strong candle, right? You don't see this wick right here, a little bit of a wick right there. You don't see anything. Prices opened here, pushed all the way up here. Got 2 days of relatively strong volume. Wasn't to the volume average, but pretty strong. XLF financials, same thing. It sold off just a little bit, but you see prices pushing up to the top. Also, we're hitting up against this 37. What's it going to do? It seems to be kind of range bound between 36 and 37, even though it dropped off here, but right now it seems to be stuck in this range. I'll probably need all three of these sectors to really be cooking to the upside in order to get everything else to break out, or at least to get the S&P 500 to kind of start moving up, because these three sectors make up a significant amount of the S&P 500, especially combined all together. Industrials, same thing, running into a little bit of top right here, but right, 2 days, we're back up to the top where this dropped off, almost back up to the top, kind of back up to the top of there. 2 days right here, we're over the top of that one. This one we haven't made it back up to the top. Basic materials, this sector doesn't make up as much of the S&P 500, but it's all a part of it. And we see that's kind of lagging to get up to the top. Communications has it's kind of been selling off. It gapped up and it filled that gap. Right, we're back down here. So if this is a force, look at how the volume just kind of trickled down. Right, so selling seemed to kind of taper off. Now we got some buying coming in, but it just tested up here by this 60-ish area and sold off. These stocks could overlap over here because I think Meta's in here. Apple. Energy has had a pivot here, have a pivot here, and kind of up in the middle, sort of just like looking at crude oil, right? Overall, more sellers than buyers. And consumer discretionary, looking pretty weak, right? Fading back to this 200-day moving average, bumped up today. Let's see how it's gonna play out. Today's only Monday. Got to see how the rest of the week is gonna play out for sure. And consumer staples, okay, seems like we're trying to make it up. Got to see if it's gonna get over this point. And utilities, look at that, big drop down. Next day, boom, big drop up. And then today, we're over that. Now we're getting stuck in this kind of area here. Real estate, right? Remember, I forgot what day it was, but I was talking about these W patterns. So in here, we got to see it get past or get up here to 42. What's it going to do? Same thing over here with retail. Oh, Snapples. Let me get on the right thing here for you. All right, so it looks like take a look at our S&P 500 line chart. I'm still of the same mindset that want to see what happens between the 420 and 440 area. I think ending last week, we ended at like 408 and some change. Right now we're a little closer. Okay, so as far as like 420 and 400, what's right in the middle? 410. Last week it ended at 408, right? $2 closer to 400. Now we're ending at almost 413, but now we're about $2 or $3 closer to 420. Pivot, had a pivot right here. We see that pivot right here. We also had a pivot here. So let's see what's going to happen, right? Luckily for me, and if you want to learn how to do basically being a net seller of options, you don't really have to be accurate with direction as much as you have to be when you're doing a directional trade, right? When you're selling options, you can make money and you just basically can't be too wrong. When you are doing directional trades, you have to be right. So which one seems easier? Just not being that wrong, or you need to be right? Well, I'll tell you what, when you're selling options, if you're right, you make money. If you're wrong, depending on how wrong you are, you still make money. Directional, if you're right, you make money. If you're wrong, you don't. So I like putting the odds of success in my favor because there's a lot going on, right? As I was mentioning, this is not your grandfather's stock market anymore. It's not the stock market of the 1970s. Right? There's a lot of stuff that goes on that Jim Cramer is not telling you about. And you just basically not learning, but it's happening. And if you dig into the weeds, you'll learn, but it's not necessarily going to be easy because it's sort of, everything's kind of a controlled atmosphere. And once you kind of understand the different control mechanisms that are in place, then sometimes it's a little easier to figure out strategies that can kind of help you through that. But at the moment, what I'm seeing is I wouldn't doubt it if we're going to go up here and test this 420. Right? We had, of course, we got this stuff that could really affect what's happening. So let's see how that stuff comes out. But just by looking at what the market's doing, I wouldn't doubt if it goes up and tests this 420 sometime this week. I wouldn't doubt that unless it really goes down. Whatever way it goes, though, whether if it goes up to 420 or if it goes down to 400, pay attention to how easily or what happens when it gets to these areas. For example, if it gets up to 420 and it kind of gets stuck there, then that's going to be different if it gets up to 420 and it blasts through 420 and within a short amount of time it's at like 425 testing 430. Right? That's different than if it has a hard time and it's struggling around 420. Right? It's struggling just to touch 424. So same thing on this side, right? If it goes down and it's having a difficult time to touch 400 and it seems like there's a lot of support at like 401, 403, or is it dropping below 400 and is it bouncing back and forth between like 399 and 401? Or does it, go like butter through? I think that there's more of a chance it'll go strong to the upside right now than the downside, just because that's kind of the way it's been going, right? Low, higher low, higher low, higher low, higher low. So we're definitely we have been in an upward trend. How far can that upward trend go? And I think once we get into the 420, 440 area, that how it goes through there should give us an indication of how strong the bull market is. Now remember, the bull goes up the stairs and the bear goes out the window. So it could volatilely go up. But as far as like, are we going to get back up here? Are we in is 2023 going to be a bull market, bear market, sideways market? I think the 420 to 440 is going to let your good buddy Brent have a better idea of that. And at the moment, until I see it slice through butter, through 420, 425, and really kind of like start maybe basing around 430, or just depend on if it goes easily through 420 to 430, then I think we got a better chance of being in a longer bull market. If it doesn't, then I think we got a good chance of being in a sideways market, which we have been since kind of, I don't know, maybe about right here. What day was that? Since about the 5th month. All right. But boom, drop down. But I get it to drop down lower. But this is really where, like, looking with hindsight, right? And look at this. Right through here. It's still kind of right in this area. So that's what I got for you guys and girls. The main thing about this stuff is that number one, verify before you believe. If you hear something on TV, on YouTube, verify it before you believe it. How do you verify it? I have to figure it out, right? I'm suggesting things that'll force you to be smarter, force you to get better. Consider that there's a lot of people, for whatever reason, they have their own agenda, and maybe you come at an expense of it. So protect yourself from that. And when it comes to money, there's been so many scams and so much BS and things like this that you're safer with your money to assume that people are lying to you, and you are going to take action of giving your money to other people very slowly, and you want to verify. And then once you verify, if you find out that what they are saying after you verified it is true, then give them your trust. But a lot of people don't deserve your trust. Now maybe when for your family members, maybe you trust, then verify. But look, you don't know Jim Cramer, right? You don't know Jamie Dimon. You don't know me. They don't know you. Anybody you see that you're not meeting face to face, even sometimes when you meet people face to face, they don't care. So that's what I'm suggesting. I'm suggesting, at least when it comes to financial stuff, verify before you trust people. Someone tells you something, figure out a way to verify it. And if you think to yourself, oh, I don't know how to verify it, get smarter. I challenge you to get smarter. I challenge you to improve yourself. I challenge you to be the best version that you can be. If you have children, do it for your kids. All right? You guys have a fantastic day. Aloha.